Thomas Ankenbrand co-founded AVACO, a startup company specialized in financial market and agent-based modeling. He joins us today to discuss house prices in Switzerland. Thomas, good afternoon.
Good afternoon, Nicolette.
So, tell us a little bit about your models, or rather tell us about the importance of house prices in crisis situations and your own models.
With pleasure. You know, the house prices are very, very important for the economic situation of a country. US and Spain markets are good examples. We know very well how important good economic situations are for real estates and real estates for economic situation. Especially also for the banking system and the financial markets, sounding real estate markets are very important. Our models are a little bit different because we are not trying to forecast or to evaluate real estate prices based from bottom up on single houses. We are trying to model real estate markets in relation to interest rates and such things. We are using agent-based models for that. Agent-based models are based on the following. We are trying to simulate the behavior of single market participants, the so-called agents. These agents make a trading decision based on their rule set, on their individual rule set for buying or selling real estate. And the combination of all these orders for selling and buying real estate give us, in summary, a market forecast which can be used for trading or for risk management.
Who are these agents?
These agents, we have for the Swiss real estate market, we have three types of agents. The first type are the individual private residents, like you and me. Then we have the institutional investors, like pension funds and insurance companies. And at last, we have the speculators.
But house prices have moved very little in Switzerland, or rather they have moved upwards, unlike in other countries. Can you summarize what the past is and where we are today?
Yeah, at the moment you are correct that the Swiss prices are stable or in a long-term increasing path. The cycles in Switzerland are not the same as outside of Switzerland, of course. In the past crisis, Switzerland is not affected at all. But we believe at the moment that the Swiss market is in a rather weak condition. The reason for that are the following. We have two arguments for that. The first argument is based on our agent-based models, where we think that the market is in a weak condition. The second argument is based on more a technical or a chart analysis, where we have analyzed all the past or most of the past real estate cycles around the world. Let me start with the first one, with the fundamental one. The agent-based model indicates that the market is in a weak condition. The major reason for that is that the most investors are fully invested in real estate, and there are not a lot of buyers left. And so in any shock situation, we will see a sharp decrease of the real estate market prices. Such a shock could be the interest rates. If we see the interest rates are increasing, our scenario shows a very strong decline of the real estate market prices.
So what you're predicting in a way is that, for example, in a case of interest rate rise, that would be more of a hard landing than a soft landing.
Yes, we believe very strong in a hard landing. In address this question, we have analyzed a lot of past cycles in real estate. And what we find out is that we see that the real estate market has a very cyclic behavior. The real estate market is moving up or down, but more or less never sideways. So if this long-term increasing trend of real estate market prices in Switzerland stops, you have to expect a hard landing. What this means? A long-term decline of the real estate prices. The reason is that also the downward and the upward trend in the cycle of the real estates are very symmetric concerning the slope and the duration. So we believe in a scenario hard landing once the tipping point is reached.
Thomas, not a very reassuring conclusion, but thank you for joining us today.
Thank you very much, Nicolette.